This week was Christmas. The markets were slow, the banks were closed. Most people were completely checked out. But the portfolio, it didn't take the day off. While I was opening gifts, the income engine just printed its second round of payouts. The infinite money loop isn't theory anymore, it just paid for itself and then some. Let's look at the numbers. Now let's start with the main engine. We're sitting at $29,880. The Santa rally is in full effect, pushing us up 1.1% for the week. Now you'll notice something new here. I made a strategic change to the allocation. I added SPMO. This is the S&P 500 Momentum ETF. To fund this, I shaved 5% of VOO and 5% of QQQM. I took that 10% capital and I'm deploying that into Momentum. Why? For two reasons: performance and diversification. SPMO has a decade-long track record of outperforming the broad market. By adding SPMO, I'm diversifying how I make money, moving beyond just market cap weighting to target the specific stocks that are actually driving the market's returns. So the engine is now fully calibrated. We have core growth, we have small cap upside, and now we have a momentum turbocharger. I'm still bullish, but this setup ensures I capture the broad rally, including small caps, while automatically overweighting the winners via momentum as we head into the new year. Leverage check. 7,300 borrowed, LTV is 24%. Even with the new position, the risk profile hasn't changed. We just optimized the engine. Now let's look at the infinite loop. This is the most important part of the entire strategy. My second round of distributions just hit the account. $74 from SPYI and $37 from QQQI. That is a total of $111 in pure cash deposited into the account this week. But remember, this is a margin strategy. The money isn't free, I have to pay interest. My projected interest bill for this month is about $30. Do the math, $111 coming in, $30 going out. That leaves me with $81 of net profit. That $81 didn't come from my job. It didn't come from my savings. It was created out of thin air by the spread. And here's the best part. I won't spend it, I will reinvest it. That $81 will buy more equity, which increases my borrowing power, which allows me to buy more income, to get a bigger payout next month. The flywheel is officially spinning. Now I want to look at the projection sheet. Week 8 is in the books. Now aside from installing that SPMO turbocharger, the strategy this week was to literally do nothing. The VIX is asleep, it's under 15. My rule is simple. When volatility is low, I'm not aggressively deploying extra cash. I'm just letting the leverage work. I made my one tweak, I set the allocation, and now I let the math do the heavy lifting. That is the definition of the strategy. Tinkering is fine, but constant trading kills returns. We set the snowball and we let it roll. Next week is New Year's. Markets are closed on Thursday. It's going to be another short, choppy week. I'm keeping my powder dry until the first full week of January. That's when the institutions come back from vacation. If they decide to take profits and the market dips, I'll be ready to buy more SPMO. If they keep buying, we ride the wave. If you want to see how this new 4 ETF engine performs in 2026, make sure to subscribe. And as always, please remember, I'm not a financial advisor. This video is just for entertainment. Margin is risky, so always do your own research before you click any buttons. Happy New Year, guys. I'll see you in week 9.